Welcome on in, folks. It's Natasha Varela, the Money-nista, 20 years in audit, accounting, and tax, 13 in large business and international division of the Internal Revenue Service, where I examine large entities that report 10 million or more in gross receipts and or assets, and the high net worth individuals that are owned by them. So, let's talk about the most important tax codes. Right? A lot of people, they think of the tax code as this big gobbledygook of foreign language. You don't need to know all of it. You just need to know a few. Okay. So let's talk about the most important lines of the tax code. Section 61, which is gross income defined, right? That would be your wages. That would be rental income. That would be royalties, commissions, business income, all the like, right? Income, basically. For my business owners, section 162, that is your trade or business expenses. Okay. Things like advertising, things like parking and tolls, things like hotel, lodging, conferences, equipment, machinery, anything that is associated with your business that's considered ordinary and necessary, right? Ordinary meaning it's normal for your business. Necessary means without it, your business cannot thrive, strive, make any money, right? Can't have, it won't have any intent to profit, right? They won't show any intent to profit. 6001, that's your books and records. You have to have books and records, okay? They cannot be commingled with your personal expenses. You must have a separate set of books and records for your business, okay? It must be readily accessible and available. Okay, and then let's talk about section 179. That is the election to expense business items that are normally capitalized. What does that mean? So normally you have items that are capitalized, which is you take the cost of the item, okay, and you expense it over what we call the life of the item. Okay, so let's use computer equipment, right? They having a useful life of, I think, 5 years. So you would take the cost of the equipment divided by 5, and you would take that amount every year for 5 years. Okay. Section 179 allows you to expense the full item in year 1 that you purchased and place the asset in service. Now, section 469, that is your real estate tax code, your passive activity losses. And I talk about that a lot, even for my business owners or just my sole real estate investors who don't want to own a business separate. That is one of the greatest tools in the tax code, giving rise to faux expenses like bonus depreciation and depreciation, which is accelerated expensing of items that are associated with your rental that can give you hundreds of thousands of dollars of tax relief per year. As well as cash flow if you purchase correctly. And it can offset if you work within a tax code as a real estate professional, and it can offset business income. It can offset your W-2 income, whether it's from your employer or you pay yourself, any W-2 income. So those are the most important tax codes that we talk about in the Tax Strategies Mastermind. I'll drop the link in the description box below. Feel free to join, and I hope to see you all there. It is top of the year. We do need to do things correctly. All right.